While trading is a mystery, there is one simple truth. And that simple truth is simply that no one knows where the market is going to trade on any given day. You can watch whatever news stations you like. You can listen to whatever gurus you think can forecast the market. But the fact is, nobody knows where the market is going to go on any given day. As for me, I use 6 trade setups that are repeating patterns that repeat virtually all the time. And there are only 6 of them, and if you know what to look for, you can learn to spot them, and maybe they will give you a clue as to which way the market is going to trade. Now those 6 trade setups, and I have them here on my screen, are the gap, support and resistance, trend, time and price, momentum, and candlestick, or GST TMC, as I teach my students in my trading course. The fact is, the market is not necessarily going to do what a setup is going to indicate it might do. So you need to take a setup with a grain of salt, because again, no one knows which way the market is going to go or when. Nevertheless, these 6 trade setups are historically, or have historically, repeated. And so if you know what to look for, if you know how to spot a setup, it'll give you a hint, a clue, as to which way the market is going to go. Now, along with these 6 trade setups, there's also indicators. Now, there are hundreds of indicators, and it boggles the mind, really, if you want to load up your chart with all kinds of indicators. I only use one, which is the stochastics. You see it at the bottom of my screen. And the reason that I use the stochastics is, together with price movement, stochastics can give you a clue as to where the market is going to turn, because that's usually the easiest way to spot where the market is going to go. So stochastics, again, adds to the clue of the setup. Now also, you need to know what to look for in terms of day-to-day trading. And those things to look for are where the market has closed the previous day, which of course is the basis of the gap trade, and also the intraday high or low. It will make a powerful statement in helping you determine which way the market will head. It's sort of like finding one end of the daily candle, and then you'll know which way the market is going to go because you'll know where the other end of the daily candle is. So how do you know that? Well, you use the Taylor trading zone in conjunction with the intraday high or low. And you see the trading zone on my chart. I calculate it every day religiously. So those are the rules of trading, which really there are no rules. The rules are use the setups, get the hints from the intraday high or low. Of course, it would help if you take a trading course. So these are the ways to trade. Now, 80% of people unfortunately fail, and many of the people who fail stop trading or they give up. Now, you don't have to give up. You can learn to trade successfully and consistently. When I say successfully, I mean some trades are going to lose money, no doubt about it. But if you learn to spot these setups, learn to recognize the setups, learn to know where the intraday high or low is, use the Taylor trading zone, use the stochastics, plus any indicator that you feel comfortable with, you'll be a better trader. Now, the only thing that I've left out is the market economic calendar. And it's important to study the economic calendar, or at least look at it every day, so that you won't be surprised when announcements come out like this one that came out on Thursday, April 4th, where in the early afternoon, a Federal Reserve official announced that the Federal Reserve might not lower interest rates as the market had expected. And that set off a real decline in the market. It went down 1.5% or something like that in a very short period of time, as you can see. And so you have to know what announcements or what events are going to occur and which ones are going to move the market. Not all events move the market. Certainly, when a Federal Reserve official speaks, always listen. Sometimes it's a good idea not to be in the market during these times where movements can be earth-shattering. So, as you see here on Thursday, some people made money through luck or whatever. Some people lost money. Remember, nobody knows where the market is going to go. So if you think you're a bad trader, you're not a bad trader. You just have to practice learning the skills that it takes to trade, and then use your best, take your best guess and take your best shot. That's the keys to success and to consistency. So that's my video for today. Thanks so much for watching. Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.